Imagine having an indicator so powerful it feels like you can see the future of the market. Today I'll show you exactly how this works and why most traders completely overlook it. What if you could predict the future? Okay, not literally, but close enough. There's one indicator that can give you a clear edge in the market. It doesn't tell you exactly what will happen, but it provides clues about what's mostly likely to happen next. The problem, most traders either don't use it or they use it completely wrong. By the end of this video, you know how to harness its power to make better, more confident trades. This indicator is none other than volume profile. Here's why it's so powerful. Volume profile reveals the story behind price movements. It shows you where the market is building value, where traders are piling in, and where big players are likely positioning themselves. It identifies key support and resistance levels. Unlike traditional methods, these levels are based on real market activity, not just random price points. It helps you to anticipate reversals and breakouts by spotting zones of high and of low interest. You can predict where price is likely to react. Let me show you quick how the volume profile looks like, how it works and how you can use it. I will show you later in the video. The market this year is S&P 500. You can use it in every market. That's important to know. Second, the software is TradingView. If you don't know how TradingView works, no problem. I have several videos on my YouTube channel. Check them out and you will understand TradingView completely. Right now the chart looks beautiful. Why? We have no disturbing, no unnecessary indicators, but we want to understand the market in deep, right? What we can do is we can use the price action understanding, but we want to understand where the market participants are active and who is moving the market, you or me? No, it's only the big players. Where do they build their positions? Always in a range, right? So what is a range? We have a range like this. It's a zone where the market moves sidewards. But that's not what's important right now. Important is the understanding who moves the market. So, and then we want to see where the big players are active, right? So, and for that we can use the volume profile. Let me just mark this big range here. And now the magic begins. Here on the left side, you see the volume. You see where the big players were active more and where less. You see this area here and you see this area, right? But do you see the magic? Do you see this line straight through the market? Do you see where the market reacted? Let me put this line. Do you see where the market reacted? Do you see where we have high volume? Do you see where we have low volume? Do you see where the market came down to this area here? Interesting. Okay, let's move on with the knowledge. As I already mentioned, the power of this indicator lies in its ability to give you a framework. Here's how. High volume nodes. These areas act like magnets for the price. They indicate zones where traders have found agreement, making them strong support or resistance. As I told you, high volume nodes is this area here. This one here. Low volume nodes. These are rejection areas where price is unlikely to stay for long. When the market moves into these zones, it's often a sign of a breakout or rejection. And that's what I showed you. You have this low volume zone here, and you see on the right, the market tries to come into this zone, but was rejected. By understanding how price interacts in these levels, you can predict whether it will bounce, consolidate, or trend. You see how the big players used their power to break through this zone, okay? But what happened then? They came back. You see this here. You see the reaction. What did they do? They took more power to move on. What happened then? They tried to get higher, but they didn't have the chance to get higher because there were no more buyers interested. The only direction they can go is down, right? So what did they do? First, they tried here. That's the first area where they tried to reject. Yeah, they tried to come into this area, but then they moved on exactly to the most interesting price. It's the POC. It's a point of control. VPOC, volume point of control. So they touched this zone, they tried to move higher, they didn't have the chance, they came back, and then they came back, they touched the low volume node, a low volume area, and they continued higher. You see, the first try, they came back again to this high volume area, and then they tried to move on. But you see, right now they are still struggling, and you don't know what happens next. But what you have is an area where you see that the interest of the big players is very high, and that they try to get more power, more strength to move higher again. And what is the next target? Next target is this one, this range, or this range, right? So now it's interesting what happens next. They try to move higher, then this is the zone where they want to go, where they will go, or they go lower from here, so below this point, below this area, they don't have enough volume, they don't have the interest, and then they will move lower. Okay, I hope you understand what I want to say. Many traders misunderstand this indicator because they overcomplicate it with unnecessary overlays, or they use it in isolation instead of combining it with price action. It's very important. Or fail to look at across multiple time frames for context. Very important. Yeah, quick tip, always zoom out to see the bigger picture. A high volume area on a daily chart might behave differently on a 5-minute chart. Let me show you what I mean by this. We go down to the 5-minute time frame, and then we go back to the last high, this here. And so, where do we see the first try to move lower? This, you see this, right? So then I use the volume profile again to find the interesting levels. Let's see this. I put this here on the chart, and do you see the magic? Yeah, so price action, if you use it just with price action or other indicators, most of the time it's like, yeah, okay, you wait until the market comes back to this level because this is the rejection area, okay? No, what I see is this high volume area, and you see what happened, you see what happened here, you see what happened here, you see what happened here, you see what happened here. So then the market came back one last time. They didn't have the chance to go back to the VPOC, they only had the chance to just touch the high volume area. Let's mark this. And do you see this? Do you see this here? Do you see the high volume area here? Do you see what happened? The market, they came back in this zone, then they tried to pull lower, and then they came back. They just took the last power, the last strength they needed, and then you see what happened next. So, but when we zoom out to the 1-hour chart, yeah, that's what I already showed you. Then this zone seems to be very small, right? So when we go to the daily time frame, the context looks completely different. So where do we want to get informations? We want to get informations from, let me show you this in this zone here, or let's take this down below where we have the last range, and you will see what happened. The market came down. Yeah, the market came in the high volume zone, the market reacted in this level, and then they continued higher. And when you go too deep, it's always your focus on the time, a 5-minute time frame. It's good for the daily basis, for a day trader. But then sometimes you get surprised that the market is doing something that you didn't predict, okay? Here are 3 practical steps to start using this indicator effectively, okay? Identify key levels. Use the indicator to mark high volume and low volume zones. Very important, combine with price action. Look for confirmation through candlestick patterns or other indicators to validate your trades. And set clear rules. Decide in advance how you will enter, exit, and manage risk around these levels, okay? Imagine if you only have the candles, you see the price movement, okay? But when you open the candles and you watch into the candles, where you can see what's really going on, at that point, it will change your trading completely. Does this indicator guarantee 100% accuracy? No, it's not a crystal ball, but it gives you probabilities. Can I use it on any market? Yes, but its effectiveness may vary depending on the assets, liquidity, and behavior. This isn't about magic or shortcuts. It's about stacking the odds in your favor. With this indicator, you trade with more confidence, knowing you have a deeper understanding of the market structure. Remember, trading is about probabilities, not certainties. But when you have the right tools, those probabilities can be heavily in your favor. If you've used Volume Profile, comment below and share your experience. What's worked for you and what hasn't. In my next video, I show you how to combine this indicator with a killer strategy that works across all markets, stocks, forex, and futures. Make sure you're subscribed so you don't miss it.